We got the latest look at inflation in Canada today. The monthly print showing some signs of easing inflation, even though core inflation still could be a challenge for the Bank of Canada. What does that mean in terms of interest rate policy from our central bank? Let's talk more about the outlook from here. Randall Bartlett is Deputy Chief Economist at Desjardins. Randall, it's kind of an interesting moment for the Canadian economy where I think a lot of people have grown accustomed to worrisome headlines. It looks like you're seeing evidence in consumer behavior where, sure, we've been resilient, but we're also being a little bit cautious. And I wonder if that's playing a role in some of the inflationary effects paring back right now. What's your assessment?
Yeah, when we take a look at the inflation data today, I think that generally it's a good news story for Canadians looking for a little bit of possible relief on the interest rate front going forward. We did see that headline inflation was down a couple of ticks to 1.7% relative to where we were in June. And when we look at the core inflation measures that are preferred by the bank, certainly they inched a little bit higher in the month of July. But when you look at the actual near-term momentum under some of those measures, and we look at the seasonally adjusted data measured on a 3-month annualized basis, it fell on average from about 3.4% down to 2.4% in the month. So we've seen in the very near term a fair bit of heat actually come off of some of the underlying price measures that have a lot of weight put on them by the Bank of Canada, and we think overall it's pretty welcome news for Canadians looking for a bit of relief on the borrowing cost side of things.
So then what do you think the Bank of Canada is going to do? Because I think while the door could be open for a rate cut in September, and I mentioned September for two reasons. It's the next time they're going to have a decision, but it's also there's so much market chatter around September because there's growing expectations that the Fed is going to cut. So if the Fed's cutting and the Bank of Canada isn't, that's going to sort of spark another conversation. But we do have a jobs report, an August labor survey that I believe we'll get early September. We'll get that reading. I wonder if that will be one of the determining factors on whether or not ultimately Tiff Macklem feels that he needs to cut rates again.
Almost certainly. When we look at the jobs data that we had for the month of July, obviously it came in weaker than economists had anticipated. And we've seen just generally on the economic front that there's been a fair bit of weakness. GDP growth is expected to be weak in the second quarter when that print comes out. The Bank of Canada is expecting it to contract at a rate of 1.5% annualized. We're expecting that the labor market is going to continue to show that weakness as well. And so the inflation data, and particularly underlying inflation, has really sort of been the outlier in the trifecta of price data, GDP data, and labor market data that the Bank of Canada relies very heavily on to make monetary policy decisions. And so we think when we unpack the underlying inflation data that came out of the July release today, that certainly we think that actually is going to help to support the Bank of Canada to pivot toward a decision to cut interest rates again at its September meeting.
I guess kind of to sort of piece all the parts of the pie together, the determining factor on the jobs front is how businesses feel about keeping people gainfully employed. I think we've sort of talked about how it's been hard to get into the workforce, but we haven't seen sort of mass layoffs. Bloomberg had some economic analysis of how companies have been dealing with any of the trade-related costs, and that they've struggled to pass that on to the consumer. So whether that's a consideration in the short-term inflation numbers, or also if it's a consideration with, again, what the Bank of Canada does, like how long can these companies, eat these costs before they have to make another decision? Will you be watching that trend as well?
No, it's a very good point. And I think what we've seen in the data is that a lot of the tariff price pressures that have fed into underlying inflation in Canada were really felt back in March and April, and that we've actually seen that we've seen less of that sort of continued acceleration in price pressures coming from tariffs since then. Now, on an ongoing basis, as long as those retaliatory tariffs stay in place, we are going to see that they will continue to apply upward pressure on underlying inflation. That said, we think that those impacts are going to continue to diminish over time, and and that the Bank of Canada is going to put increasingly less weight on those as they become increasingly less of a consideration in terms of pushing underlying inflation higher. That said, if we do see further acceleration in trade tensions, that would obviously exacerbate those price pressures. But signals we're getting seemingly from the federal government is that there isn't really a lot of desire to continue exacerbating the trade tensions with the U.S. And there is a desire to take some of that pressure off of Canadian businesses and Canadian consumers. And so we'll see how that plays out going forward. But it seems like some of the worst of that core inflationary pressure, that tariff pressure being applied, may be in the rear view now.
All right. Well, with all that said, I think this is sort of a moment for the economist community to earn their paychecks, because there's a lot of differing views out there on what ultimately is going to happen with interest rates. And, still plenty of market participants that are not making a strong call on a rate cut by the BoC next month. Just update us, remind us where your team's current thinking is.
Yeah, it's a great point. I think we're at this sort of unusual spot in terms of economists making calls on interest rates, where the economy is weakening, but we still have elevated core inflation, and so the Bank of Canada, dealing with this uncertainty, is trying to strike a balance between the different aspects of what's happening in the Canadian economy. Our view is that the Bank of Canada, given the inflation print we saw today, is likely to be able to bring in a cut in September, as it's able to put a little more weight on the weakening Canadian economy and labor market going forward, as inflation does continue to soften somewhat relative to the strong core inflation we've seen recently. But markets haven't yet priced in a full cut for September, and so we'll see what comes with the data going forward. The GDP data at the end of the month, labor market data at the beginning of next month, and then the inflation print that's just the next inflation print that's really just going to come the day before the next Bank of Canada policy rate announcement.
Okay, Randall, thanks a lot. Lots to watch for. Interesting times indeed.
Thank you.
Randall Bartlett joining us with his perspective on the inflation story.